Okay, let's go. Welcome, everybody. My name's Walter Peters. You're here at the Naked Trading webinar, and today we're going to talk about double tops and double bottoms. This is actually a special case double top and double bottom, so it's not a normal double top and double bottom. And if anyone here has a chart that you would like to look at, that you think, yep, let's I don't believe that this happens on any old chart. I want to see it happen on this pair or whatever. We'll take a look at that. GM, what is GM? Kiwi and Aussie. Okay, cool. I don't know what GM is. Is that pound and Maldivian rupee? I'm not sure what GM is. GM is General Motors stock, maybe? In which case I don't have that chart. Kiwi and Aussie. Is that the Aussie-Kiwi cross you're looking for, or the Kiwi against the USD and the Aussie against the USD? Which one? We can look at all of those. Good morning. It's great to have people in Europe. I know you're just waking up and you're just kind of wondering what's Thursday going to be like. I can tell you from the future here in Australia, it was a pretty good day. So let's take a look at the Kiwi and then the Aussie. Well, here's the Kiwi. First of all, I'll just quickly explain all these squiggly lines and everything. This is a trade I took yesterday. I'll get rid of these lines and squiggly stuff. What I would like to do is show you kind of. Good morning. GM is good morning. See, I thought it was a pound versus the Maldivian rupee, but I was wrong. All right, so good morning. So this was a pseudo kangaroo tail. The stop loss was which is obviously this candle. I'll show you. It's a sell trade. It hasn't hit target 1 yet, but it's getting really close to the point where I'll move the stop to break even. So the low on this candle, it didn't quite fit the kangaroo tail because the open was just a little bit outside of the bottom third of the candle. However, I took it anyway because it was so good. It was starting to roll over and it was looking really good. You can see here that it was, so this price right here in blue, in dark blue, that's the entry price at 72.73. If it gets to 71.80, 71.70 area, I'll move to break even or plus 5 pips. My stop loss is at 73.75. So for those of you that are really good at math, that's 102 pips of risk on that one. And the first target's all the way down here at 71.20. It's about 150 pips. And then the second target's at 70.40. So that's about 230 pips or so. And I didn't have a third target on this one, but if I did have a third target, I would have put it down off of these lows right here, which is around basically 70, 69.90 or 70, yeah. Okay, so that's a kangaroo tail, but that's not what we're going to be talking about today. We're going to be talking about a special case of a double top and a double bottom. It's the same rules. By the way, do you guys know that as Forex traders, you have advantages over stock traders because when stocks hit an all-time high and then turn around, it's a very different to a low. And if you go back and look at stock charts, don't take my word for it. Go back and test this out for yourself. You'll see that the lows are often like V bottoms or occasionally double bottoms, where the market kind of just, well, it could be a double bottom on a 4-hour chart, but a V bottom on the daily or something. But the point is that these bottoms are made really sharply and really harsh looking on the chart, but the tops are really hard to see because it kind of rolls over, kind of like what we saw here on that Kiwi chart. So whereas as a Forex trader, you actually can take the rules that we're going to show you for the double bottoms, and you can apply those to the double tops. And you don't have that possibility as a stock trader because the double tops are inherently different to double bottoms. The bottoms, I should say, not the double bottoms. the bottoms are very sharp and often very, wedge-like and really sharp bounces, whereas the tops are just kind of like, whoa, 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 and then it finally rolls over, which is kind of like what we saw here on the Kiwi. I'll show you. See how it just kind of, whoa, it keeps probing, keeps probing, keeps probing, and it finally just gives up and falls. All right, so let's take a look at this pair here. I'll go back. So first, I'll write the rules up here for you guys. The first thing you want to do, maybe we'll go to the 1 hour. The first thing you want to do when you trade these is you need to define what's the market doing right now. Is it going up or is it going down? So this market's going down here, so we might be looking for a double bottom. Okay. Now, what does that look like? Well, if you're unsure, a really good tip is to just simply go to the line chart, which is essentially a 1 period moving average on the closes. It's really kind of the way to go here. And what you'll notice is that the market will hit, it'll hit here like it hit there, and you go, oh, maybe this is a double bottom. Maybe that's it. Here, let me zoom in so you can see a little bit better. So you go, okay, maybe that's the double bottom, right? Let's see. I'm going to hit the F12 key and advance my chart. So it should come back down here and make another touch, but it's not. It's just kind of languishing around. To me, this is not a potential double bottom at this stage because it's consolidating. I would not consider this touch 1 here and this touch 2 there. I would not do that for a number of reasons I'm not going to get into, but mainly because these candles didn't move away from the first touch. They kind of were in the vicinity, and we want them to sharply move away like it started to in the beginning, but then it kind of came back and hung out around there. And then secondly, the second touch right here wasn't punctuated by a very strong bullish candle. So I'll keep going here and I'll wait and see if I can find another one. Okay, maybe we've got a double bottom here. No, keeps going lower. No, keeps going. Oh, maybe we have another one here. Let's see. It touched. It went up. Let's see if it comes down. No. Right away, I know, now that I have this big, fat, bearish red candle, that's not a double bottom. It's going to have a huge white candle to convince me that this is a double bottom. And it doesn't. It doesn't even engulf the prior candle, so that's no good. Now it's just consolidating. Consolidating. Basically needed to go lower here and get out of this. There we go. Ah, maybe that's a double bottom. Maybe it's double bottom. Maybe it's going to come up, come back down. Come back down now. Give us another touch. Come on back. Come on back down. Nope, doesn't want to. Okay, up. Now, this is interesting because if it had come back down here, I probably would have been interested in a trade. However, right away we see this is not a trade because, as you'll see here, with these rules, what I want to see is the second touch of the double bottom is actually higher than the first. So see how this one has the low at 70.35, whereas this one right here, right away we know it's already gone lower than the first touch. So that invalidates this as a potential trade, even if we did get a big, massive bullish candle on the next candle, and we didn't get that anyway. So we're still going lower. If we can go up, come back down. No. Still consolidating here. Now we're going up. So we could possibly look for double tops here. Let's see if we can get... Actually, we're just consolidating. We're not going up. We're consolidating. Completely consolidating. Okay, now we're going lower. Okay, this looks potentially good. It's a nice, sharp move up. Are we going to come back down? And we should get a really bullish candle right now. Let's see. Yeah, okay. So this is a potential setup. It's not ideal on this time frame, which is the 1 hour Kiwi chart, because it's so close. See how this candle printed right here, and then this candle over here printed only like 4 candles later. That's not ideal. Ideally, it's been 8, 10, 20 candles between touches. But let's look at this one. Let's also assume that we've already identified that this is a support and resistance area on the chart. So I'm going to go ahead and draw my line in there. I'm actually going to make it really thick and a different color so I know to take this off later because I don't want it to mess me up. But let's just assume that historically this was an area of support and resistance. So we would use this one. So the low, you'll notice on this first touch, is all the way down at 69.71. And the low on this one, 69.71. Actually 69.71 and 3 pipettes. And this one, 69.71 and 8 pipettes. So it is half a pip higher than the first one, believe it or not. So that's how I got tricked into that one. Now, how do you trade this? Well, typically, what I do, so let's put the rules up here so that we're not confused. I want to make sure everyone's really clear on this. And if you email my assistant, Candy, she's at the help desk, just email her at ask@fxjake.com. She'll send you the rules for this, okay? This is called the Whammy, the Whammy or the Moolah trade. Whammy and Moolah ebook. Just ask her for the Whammy and email. Well, I didn't mean to advance one candle. I see here that it did go up, but didn't mean to do that. Whoops. And then we'll go with the Whammy rules first, and the Moolah is the reverse of that. So market's traveling lower. Market travels lower. Bounces off support level. Comes back up, bounces off support again. Now, so that's, by definition, that's a double bottom. Now, here's where we get into the rules of the Whammy, which are different to a lot of the ways that traders will trade these. So the second touch is higher. Now, in this case, it's only higher by half a pip, but it is higher. The entry is off of the first bullish candle, which in this case happens to be this candle. So your entry order above, number are we on, 5? Yeah. Entry above high of bull candle. The bull candle in this case is this candle right here. Boom, right? So that's the bull candle. So that means the entry price goes in right here above the high. It's triggered on the very next candle right here, which is actually ideal. I hate waiting for these to go. If this is really going to be a trade, it should go like almost immediately. Stop loss is down below the low of the first touch. That's very important. It's always going to be the lower low because the lower low is the first low, right? Stop loss goes below the first touch. Stop loss below the first touch. All right. I prefer to be forward-looking than back-testing. Okay. Well, maybe you can find some... Okay, here's the thing. And this comes up a lot. People will say, well, I don't want to go through Forex Tester and take 200 trades. I want to just start trading live. You can do that. It's a more expensive lesson to learn. And about backtesting is if you've taken 600 of these Whammy and Moolah trades on the 4-hour charts on the pound yen, Aussie yen, euro CAD, pound, euro, and the Swissy, by the time you actually get down to trading a live account, you're gonna have so much experience with the system. You're gonna feel really confident. So it's a much more expensive lesson to learn how to trade any system with a live account. But I understand why people want to do that. I just can tell you what I know, which is I don't know any students that just from the get-go jumped into trading a system live and they just were off to the races, started making money. Everybody I know who's good at this stuff spent a lot of time in Forex Tester. So for what it's worth, that's what I've learned. But everyone's got to decide how, what makes most sense to you. But this is what I've learned. Okay, so and by the way, like a lot of the stuff that I think is going to work, I run through Forex Tester and it's crap. It doesn't work. It's like, oh well, back to the drawing board and find something else. Most of it, in fact. But occasionally, so what I do is I'll run it through Forex Tester, see if I can triple the account, and not using like 10% risk a trade or anything, something manageable like 1, 2, 3% per trade. And then what I'll do is I'll run it on a demo account, and then I'll run it usually on a small live account just to make sure that it's working. And then at that stage, if I can triple my money at all three of those stages, then by the time I get to my regular standard size account for that system, it's going to be like, I'm going to have a lot of confidence in it. But that's just that's the approach I take. So here we go, guys. Look at this. It triggers right here. The stop loss, obviously, it's a few pips below that low. It's a few pips above the high. So it's about 30 pips of risk. We'll call it 31 pips of risk. Where would be a good spot for target? Probably up here. That makes a lot of sense. Yeah, let's see if that happens. Let's see. Nope. That's really useful to know. Thanks. No problem, Carol. I'm glad it is. The problem with this is we're kind of running up against this minor level. If it stabs up here again, I would probably move to break even. Like if it gets to this where this high was, somewhere around there, I would move to break even, most likely, because I don't want to get stopped out here. Yeah. So at this stage, I'm going to go ahead and move my stop to break even. Okay. Because it's made another move. It looks like it's going to break out. So now I've got my stop there. Okay. Does everyone see how I did that? I'm done. And I'm done. And then it finally hits my target. All right, so that was a break-even result. Bummer. But it's like the way I look at it is like it's a trade that I never took. The reason why it feels like a bummer is because it went to the target, which I can understand. People get freaked out. I just go, well, it was a trade I didn't take. The trade that gets stopped out of break-even is a trade that was essentially never taken. So that's one right there. Let's see other. This is not a moolah top. Why? Because the second touch is higher. Let's see if we can find here. Let's go find something. Okay, let me ask you guys this. This is the 15-minute New Zealand chart right now. Is this offering us a whammy, a moolah bottom? Is this a moolah bottom? I'm going to ask you guys. What do you think? So just keeping an eye on this. The low here is at 71.91, and the lowest low here is at 71.90. So that second move here is actually lower. So it doesn't qualify as a whammy bottom. It would not qualify. Doesn't work. And this also would not qualify, this touch here and that one. Also, look to the left here. See how it already touched here? See how it's making a low here and then it's making a slightly lower low? Again, it's hinting that no, it's not done going lower yet. It's not done going down yet, see? And this one as well is a lower low, and then it touches here and it makes a low 71.91, and then this one's at 71.90. So again, it made a lower low. So we don't have anything. I don't have anything on this chart yet. So not looking good. Let's go to the Aussie, because that was the other one people were asking about. So it's been going down here. Aussie's been a little bit choppy since that move up last week. But it's come down here and then made a lower low, so that doesn't count. Now it made a higher low here, but remember it's already made 2 touches, so that doesn't really count either. Let's see if we can find something on the lower time frame. Here we go. So here's one right here. Let's just assume that we've identified this as a support and resistance level. If that's the case, this trade, for me, I would take it off of this candle right here. The big white one, this big white one. In other words, let me mark it for you. This candle, that's the one I use, not this one. This little candle looks like it may have turned into the bottom, like the second touch, but also that one kind of looked like it too, didn't it? And then it fell further. So you really need to wait for the confirmation of the big bullish candle. And a lot of people don't like to do that because they lose out. They feel like they're too late. But remember, on a 5-minute chart, it's like 22 pips of risk on this one. It's actually quite a bit for, sorry, 5 minutes, a 15-minute chart. There we go, that's more like it. So it's 22 pips of risk. So how would we manage this one? I'll show you. The entry is above the high here. The high is at 76.29. So go 76.30 plus the spread. Right? So that's your entry price. Stop loss is all the way down here at below the low, which is 76.10 basically. So 76.08 I'll call it. So that's 22 pips. 76.08 is my stop. So where does my target go? Anyone know? Where would you put your target? 76.08 is the stop. 76.30 is the entry. It's 22 pips of risk. It's a 15-minute double bottom on the Aussie. And because I've got 22 pips of risk here, I'd be looking to probably up here in this area. Let's have a look. I don't normally trade the 15-minute charts, but I know you guys want to see live stuff, so cool. I just want to show you what it looks like when it's unfolding. So here you go. That's pretty good. Yeah, that's pretty good. I would probably put it just slightly lower, like maybe there. So if we go there, that's going to put us at 76.58. So that's 28 pips. So it's better than 1-to-1. I would do that. Does everyone see that? Does everyone see why that's the case? The only thing I don't like about this trade is it hasn't really been going down for a long time. I know it has on the higher time frame, but on this 15-minute chart, you could actually argue that it's in a big, huge consolidation box. But this is what it would look like. Like if this chart kept going down, 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 like if it didn't look like this over here, and instead it was just kept going down, 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 and then it made this formation, that would be a perfect whammy double bottom. So is that cool? You can, yeah, if you want to go 44 pips, you want to go 2-to-1, like if that's your rule, that's cool. But I would see, I'm one of those traders who kind of looks at what has the market done rather than just going by the I have some systems that just, you know, the risk sets the target. But just know that if you're going to go beyond this swing high right here, you're going to have to break through some serious resistance, because look at that. Bam, boom, blam, blam, wham, like kapow. I mean, it's a little bit tricky, but, you know, I understand why people might want to do that. So there's a live one for you. That's the Aussie. Let's look at the Aussie Kiwi, and it looks like it's just going to break it, or it's already actually, would have already triggered it. So it would have already been going long here. What was the other one, Aussie Kiwi, that people wanted? Do you follow the main trend always? No. This is actually a reversal trade. Most traders I know, they go with, they're more comfortable reversing. And I've tested a lot of traders. I give them a psychological test. You know, you can do it too. If you, I don't know if you guys, how many of you have done the test? I don't know if you've done my test. If you haven't read the book Naked Forex, then you probably don't know about the website, but you can go here, and it's free. Here. there's a test in there that will show you how to, what's going on with your. So it's naticast.com/naked-forex. You go there, you can take the test. Yeah, this is really only for people who bought the book, but I'm just going to give it to you guys too, okay? But in there, it'll tell you what kind of trader you are. You just take a test. So what it turns out that most traders like to take reversal trades. They like to find swing points, reversals, and a minority of traders like to take the with the trend style trades. What I would recommend, let's say that you are this is an awesome bullish. This is like an awesome bullish trend, isn't it? After the Kiwi tanked. The Aussie is basically sitting there doing nothing and probably going to go higher, and then the Kiwi is basically tanking. So that's why you see this. So does the Kiwi and Aussie look like it's reversing? So to me, I've been waiting for a nice bullish candle on the Aussie to buy down basically off this level that it's bounced off of. And the reason why is because I consider this bullish move up, and this is just kind of a pullback, and then it's going to go higher. But I haven't really seen a really nice reason to do that just yet. So I don't have a very nice signal candle on my Aussie chart, and the Kiwi obviously I've already shorted it, so I'm already bearish the Kiwi. And then the Aussie Kiwi. So the Aussie Kiwi looks like, yes, it's a very nice bullish trend. And anything that I'm not on any trades there. I'm not looking for any, but I'll tell you what I would look for on this one. And by the way, you can put any currency pairs that you guys are interested in, just put them in the chat box and we'll take a look. But this one would be pretty sweet. And what I'm looking at doing here is basically going long off of the tops of these highs. So if this is a true uptrend, it will pull back at some stage, and an absolutely positively sweet as honey spot for this to bounce off of would be right here. My little boy told me this morning at breakfast that he thought that honey was his favorite food. I think that's why I have honey stuck in my head. When we were having breakfast, he said, yeah. Is honey your favorite food? Okay. So so what would that look like? This isn't really a double top or a double bottom. We're getting off topic, but this was the pair that someone wanted to take a look at. So yeah, so I would go for a bullish bounce off this level. In fact, this Aussie Kiwi 4-hour chart reminds me quite a bit of my Aussie chart, which we've already looked at, but essentially on the Aussie chart, on the daily, see how the market wedged up here and then went squirt and then went up and then pulled back? This is kind of the pullback to these highs right here. It's kind of very similar to what that other one was looking like, the Aussie Kiwi. So if this is still an uptrend, at some stage we should get a really nice big fat white bullish candle bouncing off this level. You could argue that this little tiny kangaroo tail is the one, and maybe that'll work. You could also argue that you have on the 4-hour a double bottom, like this is a whammy bottom, where you got this bottom here. That's actually the lowest low is this candle, and so that would be at 76.05, and then the lowest low over here, the kangaroo tail, has 76.09. So it is 4 pips. 05. 09. So it is 4 pips higher, and then we would just be looking for the market to trade higher than the high of this little 4-hour kangaroo tail. So that's a potential. I wish that it had a little bit of a stronger candle though. That's the only thing. So 76.29. So if it goes to, it already has. It would have already triggered this one too, because it's already gone to 31. So if I said 76.29, add 6 pips. Okay, yeah. So it should go to 76.34. 76.34, 76.35. It hasn't quite reached it yet. And that would be a whammy on the 4-hour. But again, it's not really a whammy because this is really just kind of a bullish trend pullback. And it doesn't look like it here on the 4-hour chart. It looks like a big jumbled consolidation. But on the daily, you can kind of see it much easier where it's, yeah, okay, so it went up It's flagged down, and now it's going to end, and it's going to just go whoom and bounce up again. All right, so hopefully that answers your question. We can look at some other ones in terms of like bearish setups. So, oh, pound Swiss has made a move. So I've been watching the pound Swiss to see if it's going to hit this little spot right there. It's like a horizontal support and resistance area, and it's sort of a channel too. It's a good spot to sell. But, you know, ideally we want to see a candle there, like a reason to sell. Let's see if we can find anything on the double tops. No. What's been going up lately? Gold. Okay. Let's see. So here's gold. I can show you if there's anything. No, this is a trend continuation pattern. So this is a sitting here, it's flagging up, and it's probably in all likelihood, when you see this, it usually means what? It usually means it's going to boom, 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 bam, and go up, right? So there you go. Singapore dollar's not behaving. What about, nah, trying to find a really good example of a double top for you. Pound Aussie. Aussie Swiss, not really good. No, that's not a good one at all, really. So we're finally out of the box on the Aussie CAD. That's good. So on this one, I'm looking for the market to move away from this box and then come back up and touch it with a bearish candle. It's a different system, but that would be a, you know, basically a big red candle right off of 1.0027. What about the pound? Where's the pound? Where has my pound chart gone? It's not really. No, not really. It's not really a good example of that. Euro Kiwi. Okay, so this is an example of the difference between what I would call consolidation versus a double top, because some people are going to look at this and say, hey, look, it's a big, huge double top. I'm going to go short. Look, it touched right here, and then fell, and then came back up and touched it again. It's a lower touch. To me, it doesn't really fit the pattern because it goes flat here in the middle. You want it to be more of an M top. So you want it to go, it's been going up, which is great. And then this is really the first opportunity for a potential double top. The problem, though, is that it doesn't really have a V at the midpoint between these two touches. It just kind of goes flat. That suggests to me that this is more likely to break out of this box and continue in the trend. So I wouldn't take a sell here, because you would have your bearish candle right here, which is your trigger candle. Your stop loss is over here above this high of this candle high, which is 48.56. So you put your stop around 1.4857, 1.4858, and then you're selling off the low of this 48.23. So let's say I'm selling at 48.21, which it has already hit. Maybe didn't trigger you, but it could have. So that is an example of that. But I wouldn't take this one, because I'd be looking for more of a, sort of that V to it. It shouldn't really look flat like that. That's trend continuation, and I wouldn't want to go with that at all. Does that make sense? You guys clear on that? It really should have like where it touches, it moves away, and then it touches again. Not kind of like this wouldn't. So for example, this one right here is another one where I'd say, no, that's not really a double top. Some people are going to look at this and go, wow, it touched it, and then it came back up and touched it again. I know this one's higher, but let's just say that this second touch was lower than the first. It didn't really go away and then come back and make another attempt. It just kind of stuck there. That's not good. I know it fell, but that doesn't really matter. It's what it looks like. Here's one that you saved yourself because it did go lower on the second touch. So you don't get in on this bullish candle. Like you could get in on the first bullish candle, but let's say you wait for the second one. If that's the case, you saved yourself a loser because, why? Because you're waiting for the second touch to be higher. And it wasn't. It was lower here. Here's one that has a really nice second candle. Does everyone see this one? So this one's good. It's been moving lower. Your first touch is here. It's kind of a little pseudo kangaroo tail. And the second one is a nice big bullish big shadow, which is great. And it triggers the entry above the next candle. So this is great. Not only is it a higher touch on the second touch, but the second touch is also the trigger candle, which is not always the case. Sometimes it isn't until later that you get the big bullish candle, but this is a really lovely bullish candle. So seeing that, you could go long above that and then go. And the risk on this one would be roughly 25 pips. So you had 40 available, and then you either get stopped out at break even or get stopped out if you don't move to break even. I like to move to break even. Like if you know, if you were going 2 to 1, if you wanted to get 2 to 1 on this one, you would have missed it, right? Because 2 to 1's up here, so you missed it. You missed your 2 to 1 opportunity there. Here's another one where this one's tricky because which one of these is the bottom candle? It looks like it's this one. 45, 34, and 45, 34. So they're equal lows, so it's not really a whammy bottom. This also is not a moolah top because why? Because the second touch is higher. Are you guys kind of getting this? Making sense? It's pretty simple stuff. Don't take my word for it. Go out and test it. See what it looks like. See if it makes any sense to you. See if you can pull it off. You know, that's the main thing. You want to make sure that it works. That you can. A couple of things you might also look at are trailing exits, multiple targets. So maybe like a 1.5R target and a 2R target, 3R target, something like that. Or trailing exits, moving to stop loss to break even quickly, or waiting for that first pullback and then moving to stop loss. Lots of different ways to test it. What is our good friend the Singapore dollar doing? It's falling. And the 1 hour chart. Now, let me show you this one because this is kind of interesting. Some people, and I'm not one of them, would say, well, look, it touched, it moved up, and now it's coming back down and touched again. I'm going to go long. I wouldn't do that because everything here to the left is all jumbled up. So this is not really, the market's been falling, and then it double bottoms. It's more like it's just consolidating here. I thought yesterday when I saw this chart, I thought, well, it's going to break out. It's been following this trend line, squeezing up here. It's going to pop and go higher, but it never did. So instead, it just fell. So to me, for this chart, we are now in this situation. We are in a box situation, and it needs to get out of that box to get me interested in the trade. There's the pound once again. This is interesting. This could be a nice. This is a 4-hour Euro Swiss. This could be a nice double bottom, but the second touch is lower, so it does not fit the criteria of a whammy bottom. That does not count, right? Everyone can see that? It's too low. The second touch is too low. Does not fit. So no, you may not trade that pair. So on this one, this is the CAD 1 hour. you might see a pullback to here, 31.20, or yeah, the only other way that I would trade this is if you were looking at kind of like a break of this. Right? Kind of like a break of this. Bounce and go. So that's that one. So in other words, it could come down here to this 131.20 and bounce, or it could break out of this channel thing, this trend line up here, and bounce off of it. And then you could go long with a bullish candle off of that. Are there any charts that you guys want to see? Any other pairs that you want to see? I'm just kind of going through the ones that I'm keeping an eye on right now, other than the Aussie, or other than the Kiwi, and other than gold and Euro Swiss. Those ones I've been watching quite closely lately. Singapore dollar. I've showed you a lot of the ones I like at the moment. Silver is also a possibility. What I like about silver is everybody's long silver right now, which means we're probably not far from hitting the tricky spot. Probably 1850, 18.60, somewhere around there. It's likely to kind of run into some trouble. And you can check the crowd like I do. Oops. Did I do that wrong? Yes, I did. You go there and you can see how many traders are long, you know, all the pairs, silver, gold. See, if it gets over 75, 80%, you know, okay, it's time to look to go the other way. The yen is tricky. I was really hoping pound Aussie and yen. Okay. Okay. So yen. Okay. So to me, there's two things that are happening with the yen. I've been watching it, and essentially, the first most important thing is this on the higher time frame, like the daily or the 4-hour, is this 112.60 level. Watch what it does there. It'll show its hand. Is it going to give us a bearish candle there, a reversal, or is it going to sit there, print several candles there, and then blam, burst higher? My guess is that it's going to fail. It's going to go there and fail and fall lower, but I don't know that. I'm just guessing, because it could come up there and print a reversal. And I think it's going to do that, but it might not. It might come up there and then just squeezing and go. So that this level here, this 112.60 is critical on the higher time frame, like the 4-hour or the daily. Now, if you go down to the lower time frame, I think this trend line becomes actually really interesting, because we could be bouncing off this yen 1-hour trend line right now, right? So normally when you have a trend line and a horizontal level, it'll pop to the horizontal side. But this is the reason it didn't do that and instead fell off the trend line side is because this has been going down. It's a downward moving market, right? I mean, it's a very bearish market. So that's possibly why that happened. Now, the other thing to keep in mind is that you've got this long-term trend line that's been respected, okay? But guess what? It broke through, and so it could just be coming back down to 112.10. It's going to bounce and go higher from there. But I think the 1-hour chart's going to tell the story here. I think the 1-hour chart, if you watch this sucker, and if it prints, this candle's going to close in 15 minutes, right? So when this candle closes, yeah, 14, 13 minutes. So when it closes, if it closes bearish, and it usually will flop around quite a bit the last 10 minutes, but when it finally closes, if it closes bearish on this 1-hour candle, then it might be, okay, yep, that's it. That's the sign. We are going to, especially if it engulfs this prior candle, if we can close below the low here, that would be perfect. You can say, okay, put an order below the low of that candle, and we're going to sell all the way down to this local low, which would be, 111.75 or whatever. So that would be awesome if this could engulf that candle, because that means, okay, trend line respected, right? Hey, look, it might happen. That might happen. Pound Aussie. Yes, pound Aussie. Pound Aussie, pound Aussie, pound Aussie. Where is it? It's not on this chart. Okay. Boom. Bam. All right. Okay. So that's daily. That's weekly. Yeah. Okay. Yeah. So what's the 1 hour? Uh-huh. Okay. Well, be careful on this one. You know, these hop around quite a bit. Pound Aussie, pound Kiwi, pound yen. They can hop around quite a bit. I would look for a reason to sell it. Actually, I would look for a reason to sell it around 65, 70. If it gets up there and starts failing, I think that would be a pretty good spot to sell it. Remember, the Aussie could find support. So remember, we on the Aussie USD, you're flirting with support right now at this 76 level. So we're only 30 pips from there. So we may find some support. Maybe we've already found it. And if that's the case and this starts going up, then you might see the pound simply on the strength of the Aussie. I'm completely disregarding the pound right now. I'm just saying that could happen. So I would wait for it to get here and show its hand. Here's how you know if it's going to break out. If it spends 3 out of 5 candles, 4 out of 7, or whatever candles where it just keeps sitting here and doesn't move away from it, it's probably going to break. If it starts to run a squeeze play where you can draw some sort of a trend line and it's holding that price action, it's squeezing it right up against that horizontal level, it's going to break, right? It's going to go higher. If, however, it touches it, moves away quickly, comes back up, touches it again, gives us a moolah top, maybe it's going to fall, right? But you already know all about that. CAD yen. Vince, I've been watching the CAD yen actually all week. And Brendan, I don't know which one you're talking about, which candle pattern you're talking about. Sorry. If you could explain, I'm happy to. Yeah, so, okay. So CAD yen is in this beautiful box, and it has not decided to get out of it yet. When the CAD yen gets out of this box, if it goes to the upside and then bounces right here off 85.50, that would be a great spot to buy. So it's going to come up here, spend some candles up, time up here, comes back down, bounces hard, boom, go long. Same thing with the bottom. It goes down to the bottom of the box and then finally decides to get out of there and just go lower than 84.91. So it has to break out of the bottom of the box, come down here, come back up, touch it with a big red bearish candle. So either one of those would make sense. Those are the last kiss trades. Pretty simple stuff. All right. Well, thank you very much, guys. I really appreciate it. I will see you, I think, Tuesday we're on next. I hope you have a wonderful trading week. Remember to do your homework in Forex Tester and earn your pips. That's the best advice I can give you. It doesn't matter what system. I don't care if you're trading the triple moving average, stochastic, momentum, Ichimoku system or whatever. You got 500 indicators. If you don't earn your pips in Forex Tester, it's going to be tough when you go live. I hope that helps. Take care. I wish you happy trading, and we will see you next time. See ya.